Hey, it's Ben Feynman. Welcome to your March 2023 Oahu Real Estate Market Update. Now, before I dive into the numbers from February, I just want to go over a couple new things. There's a lot of new projects coming on the market, especially by the Kobayashi Group. Aliyah just completed their one-year owner-occupant release, and so now it's being released out to investors. So it's a great opportunity to get a brand new building that's going to be delivered in 2026 in the heart of Kaka'ako for a great price. Also, they are releasing Kuilei Place, which is an affordable and market building that's going to be going in between Iolani and Market City, right on Kapilani Boulevard. Pricing for this also looks great. You have to remember that they're pricing these units based on today's market, which there's a higher interest rate and there's not as much sales activity. And so they need these projects to sell out in order to start construction. So they're pricing it low on purpose to sell out. In 3 years from now, most likely our real estate economy and market is going to improve. And so I can really see a lot of these new projects knocking it out of the park. So if you're interested in some long-term investment like this, or maybe something you want to move into, let me know. I can give you a private tour. You can learn more about these projects. Lastly, I'm also selling some leased fees, kind of a unique product, but it's basically the opposite of leasehold. I'm selling the fee in Banyan Tree Plaza and Waikiki Banyan, and basically you own the land underneath the unit and someone else owns the leasehold portion. And so if you were able to buy the leasehold portion, or when that lease expires, you actually get the unit back fee simple. This is a great vehicle to use in your IRA or your retirement fund. I purchased one myself in Waikiki, and I'm actually in escrow now to purchase the leasehold to make it fee simple. I saved tons of money by doing this, and I'm doing it all in my IRA, which means it's tax deferred. It's just really cool investment strategies using real estate. You know, a lot of people look at stocks as the only way to invest using your retirement fund, but real estate, you know, using a self-directed IRA, you can accomplish pretty much the same thing. And you know, with all the turmoil going on around the world, with SVB, you know, banks kind of closing down and things like that, people are more and more turning to real estate as a safe investment opportunity because you have a tangible asset that someone can live in. And so I think real estate will always be the cornerstone of building wealth in America, and that's why I go all in on real estate as well. Okay, so getting into the numbers from February 2023 that were just released. Closed sales for single-family homes down 28% and condos down 33%. So we're still seeing less sales than last year, but there's been an uptick from this past month of February versus January just a month ago. So activity is starting to pick up a little bit. I think with the banks closing, they're probably going to have to leave interest rates the way they are or maybe even decrease them a little bit. I think if interest rates actually end up coming down, there's going to be a flurry of activity. So it's important right now, if you're a buyer, to take a look at those interest rates and see what's happening day to day because it could change at any minute. Median sales price for single-family homes down 12.3%. Now, this is not from last month. This is from last year. So from last year, single-family homes were at 1.125 million, now 987. So versus last year, we're looking at about a 12% discount on single-family homes, which is great, much needed, especially for people looking in that area. Condominiums, not as much, down 3.4%. The reason for this, I believe, is because single-family homes kind of got out of reach for a lot of people. Not a lot of people have enough cash saved, and so the interest rates really hurt people on the single-family home side. Now, on the condo side, because some people have enough cash saved up to buy a condo, the rise in interest rates doesn't hurt as much. So that's why condominiums, I think, are not down as much as single-family homes. Median days on market went from 13 days last year for single-family homes up a whopping 47 days on average for a single-family home to go into escrow. That's a 261% increase. It takes 4 times longer to sell your home in February of 2023 versus February of 2022. People with single-family homes have to recognize this, and it's not flying off the shelves like it used to. It's going to take a lot longer, so you have to be patient and find the right buyer or price your property accordingly. Condominiums went from 14 days to 28, 100% increase, twice as long to sell condominiums last month versus last year. Percent of original to list price received, we're at 96% for single family homes, so down 4.8%. So now it's more normal to offer less than asking for a single family home versus in past markets, you always had to offer above asking. Condominiums, not as much, 98%, that's down 2%. New listings, single family homes down 36%, condominiums down 37%. So not as many properties coming on the market still. Pending sales, down 31% for single family homes, down 37%. So not as much stuff in escrow. Active inventory up 57% for condos, up 19% for condos, 57% for single family homes. The reason for this is because the sales velocity is a lot slower, active inventory is starting to grow. There's a lot more to choose from. Not as many things selling as quickly. Total inventory in escrow down 29% for single family homes, down 37% for condos. So a lot of things are not as many properties are in escrow. And lastly, months of remaining inventory went from 0.9 months for single family homes up to 2 months, so that's a 122% increase, and we're at 2.4 months for condominiums. Now, 6 months is the threshold from when it changes from a seller's market to a buyer's market. We're still at 2 months, even with the longer days on market, because there's not a lot of new properties coming on the market. Granted that the active inventory is starting to grow, but because the sales velocity is a lot slower, but we're still at 2 months of remaining inventory. That means if no new single-family homes or condominiums came on the market, we would sell out of our entire current inventory in just 2 months. So it's still considered a seller's market in Hawaii. It has been a seller's market for the last 20 years. But that's not to say that you can't get an amazing deal in today's market. Now's a great time to find that motivated seller, throw out that lowball offer, see what happens. Especially if the home is vacant and they're losing money, you could get really lucky in today's market. And if interest rates end up going back down, you can always refinance. Or there's so many opportunities and things you can do. So I'm always happy to help. It's important for me to sit down so I can learn exactly what you're looking for and what your situation is. But it's important to not always just sit on the sideline. Make a move. Instead of timing the market, find the deal that's right for you, and I'd be happy to help you achieve all of your real estate goals. All right, so thanks so much for tuning in to your March 2023 Oahu Real Estate Market Update. I'll see you next month, and take care, and hope to see you guys soon. Bye-bye now.